Hi guys, it's Miika
and Mary,
and today we're going to be talking about investing. This is going to have a lot of information and we have a computer here. We're going to try not to look down at it, but we want to make sure we get all the right stuff to you. I'm going to be doing most of the talking because I do most of our investing, but Mary's going to chime in every once in a while. So we're just going to be talking about some different investing tips, some different investing strategies, some different things that you can do and different ways that you can invest. But before we get into that, please make sure that you subscribe. Hit the bell icon so you know when we post a new video. It's every Tuesday. Make sure you give us a like. It helps our video to spread to more people more easily, and YouTube hopefully will pick up our video at some point and push it out to more people. So we really appreciate you. If you have any questions or if you have a particular video you want to see us talk about in a particular topic, make sure you comment down below.
Okay, investing is a very important part of building long-term wealth and savings for the future. We'll be talking about some tips and tricks to invest better and get good long-term results.
So none of the stuff that we're talking about is actual investing advice. This is just some of the tips and tricks and things that we've learned along the way. So if you really want investing advice, go seek out a professional. Like I said, this is just some tips and tricks and things that we've learned along the way to get you kind of going on the basics.
Let's start with the best free money you can get from investing. If you're fortunate enough to have a 401k, I suggest investing as much as you can into it. If your workplace matches what you put in, then definitely put in that full amount.
So when you're investing, there are two different paths that you can take. You can choose a long-term investing path where your money is secure. It's going to be secure either way, but where your money is kind of locked off from you. Or you can choose a different route where you have complete access to your money, you can invest freely however much you want, and you can withdraw freely. So let's talk about the first option. The first option, the long-term option, would be investing into with a Roth IRA, which will leave your money locked down until you are 59 and a half. When you are 59 and a half, then you can take out your money without any penalties, but if you take out money from your Roth IRA before that age, then there is a penalty. The positive thing about the Roth IRA is that you will, when you do actually withdraw from it after the age 59 and a half, you will withdraw tax-free. If you are looking to invest long-term, I would recommend using a Roth IRA. With the Roth IRA, you can invest up to $6,000 a year, or if you are 50 or older, then you can invest up to $7,000 a year into the Roth IRA. The second path would be to invest in just a regular investment portfolio. This would, of course, be taxable income. You would have, I believe, capital gains tax, but what that allows you to do is invest however much you want to. So if you wanted to invest $100,000 in 1 year, you could do that and, grow that portfolio, hopefully, if you kind of know what you're doing. So like I said, the regular stock portfolio would be taxable, but the one positive thing is that you could sell and trade stocks at any time. So if you had, let's say you had $100,000 invested and you grew it up to $110,000, and for some reason you needed $10,000 and that's where you wanted to take it from, you could take it from there. Now at the end of the tax year, of course there'd be taxes and stuff that you'll have to pay off of whatever you made, but you can put in and take out money freely. So a couple of the ways that I would recommend that you do that is through Robinhood or Webull. And if you sign up through Robinhood, you can get one free stock that's valued up to $1,000, and we're going to give you a link right there down in our description box for you to sign up, and you could get one free stock. And what I would do is probably just sell that stock and buy probably a dividend stock whatever you choose, but we'll talk about that in just a minute.
Whether you decide to invest with a Roth IRA or regular investment account, some things to invest in would be the Vanguard S&P 500 ETF, which immediately diversifies your portfolio and gives you the best performing ETF available. I would recommend you also invest in high yield stocks that are proven long-term growth stocks as well. The Vanguard High Dividend ETF is a good start.
Yes. When you are investing in any stocks, you should always look back at the past performance of the stock. to see that it has a history of growth. You don't want to buy a stock that has a negative growth history. That's not usually a wise investment. There are some stocks that you can invest in that are more steady over a long period of time, but they have a dividend that has been proven to grow. But we'll talk more about that in just a second too. So if you're looking at high yield stocks, high yield dividend stocks, then you should research to see that the dividend has consistently grown for at least 10 or more years. This shows you and proves to you that the stock is steady and that the company is growing and that they're able to not only pay their dividend but actually grow it. Another thing to look at when you are evaluating stocks is the performance of the actual company, right? So you want to look at things like quarterly sales and sales predictions. Also look at the company's debt to income ratio. Look also to see that the company is actually profitable and growing. Another thing that I would recommend you look at is find out if the dividend payout is 60% or less of the company's actual stock income growth, basically. So what that means is that they pay out 60% or less of what they're actually making off of their stock being on the stock market. That way, the other 40 or more percent goes toward bettering the company or paying down debt. If they're paying out 80% or 100% of their income from their actual stocks, then they're not going to be really using that money very wisely, and you could end up with a company that doesn't pay their dividend or cuts their dividend. So when you look into dividend stocks that provide a dividend, I recommend that you look into monthly and quarterly paying dividend stocks. Oftentimes the monthly dividend stocks are somewhat more volatile, but they do have a higher reward typically. But there are some monthly dividend stocks that are relatively stable and have even grown over a period of time, grown their dividend payout. Another reason why I would recommend investing in dividend stocks over just regular stocks is because the dividend stocks have historically actually outperformed the S&P 500, and the S&P 500 is the best segment of the stock market as far as growth over a long period of time.
Being able to invest all boils back down to the basics of budgeting, where you have to know where every single dollar that you earn is going. If you haven't learned about budgeting and saving, then click the video card to watch them and come back here.
So one big difference between saving and investing, one thing to remember is that when you just save your money, it's actually losing value in the long term due to inflation. So that's why saving large sums of money, even if you save it in a high yield savings account, is not an investment strategy or a retirement strategy. That is literally you just stockpiling money. So saving money is something that you do for the short term and for emergencies, or if you're trying to just save up for a larger purchase. If you want to build wealth and long-term financial freedom, then you must have your money invested, and you should also be consistently investing. You also want your money making you more money. You want your money working for you. If you just have it sitting in a savings account, your money's not working for you. It's not doing anything for you. It's just sitting there. It's just taking a nap, right? So that's one big thing to remember. Saving is not the same as investing, and investing is much better than saving. So since you want your money working for you, if you are going to be doing some investing, the best way to have your money working for you is not just to have your money invested in stocks that grow, but have your money invested in stocks that grow and pay a dividend that has a proven growth record. That way you get the best bang for your buck. Terrible joke. All right. The other way to build long-term wealth is to build a stream of residual income. And that's what we're going to be talking about in the next video, is how to build a stream of residual income and some different ways and things that you can do to kind of get that financial freedom. So we really appreciate you sticking around. If you stuck out till the end of the video, give us a thumbs up. You're the boss, you're the man, you're the girl, you're awesome. So thank you. If you have any questions or anything, please comment them down below. If you found this video and our past videos helpful, please share them. We want to help as many people as possible get a little more knowledge about what to do with their money so that they can stop wasting their money and actually live their life and live it more awesome. Thank you.
Thank you.